All right, welcome everyone to my stock market technical analysis channel. In this video, we're going to go through general markets. We're going to look at some sectors. I'll point out a couple trade ideas or possible trade ideas, trade setups essentially, and we'll wrap up. So no video coming out tomorrow, and I probably won't put out another video until Saturday or possibly Monday, depending on if I find anything over the weekend while I'm looking at charts. So everyone have a nice break, and let's get started. So, okay, SPY. What are we doing? Well, it's just drifting higher, basically, slightly higher, kind of this holiday drift. This is pretty common because when you have low volume, then you just have, and especially on low volume with a lot of institutional money not trading right now, you have retail. And retail, for the most part, is long. You know, retail, they're long stocks for the most part, always long basically. So when you have no institutions trading, then you just have the retail drift higher, and that's what we got going on in the SPY. Now, one thing to notice, which is interesting, I'm going to go to the daily just to point it out. I don't know if it'll play out, but this big candle right here was, I think, a vaccine gap up candle where we gapped way up here on the SPY on some vaccine news. I think that was floated out on a Sunday night, and they instantly sold it off. The institutions on Monday came out and just sold it and smashed it down. So that is potentially kind of that's basically resistance at this point, is going to be right up around this level. So if we close today, or maybe there's a half a trading day tomorrow, I believe, but if we close, or on Friday actually, sorry, but if we close right around this level, there might be some major resistance right there. So keep an eye on that. They could smash this down back within this big purple range that I have marked out. I could probably move it up slightly, but maybe to like right there. But that's something to watch for. Qs. Qs. Yeah, same thing. Just kind of drifting higher slightly. Nothing crazy. And I don't see anything in the chart right now that tells me anything is going to happen today, of course. Now, we do have negative divergence. And so any new high, you can see if we make a new high above right here at 297.44, it's going to be a divergent high. And if we obviously, if we break above this all-time high of 303.60 anytime soon, then that's going to likely be a divergent high as well. So we're building big negative, we have the potential to build big negative divergence on the daily chart, which is typically, it's not a sell signal, but it is a setup for kind of a major trend, potentially to the downside. So we have to wait for that to all kind of come together, and we don't have it there in the charts yet. But, going back to the SPY, you do have it here in the SPY. See the negative divergence right there? And you made new highs right here. So these are divergent highs. You can continue to make new divergent highs. You can continue to diverge. However, this is a setup longer term for a potential big move to the downside. You just don't want to short until you see some sort of a sell signal. So that would be an impulsive breakdown candle, some sort of reversal candle with confirmation. We're looking for sell signals basically that tell us, okay, now's the time to get short. And until you have that, then it can continue to kind of drift higher and continue to put in divergence. And even if it goes hot, if it continues to go higher, eventually it will burn through the divergence and make a new high in the RSI. So that's why we wait for the sell signal. We don't have that yet. Here's TLT, just a quick touch base on this because I pointed it out. So you have bullish, here's your bullish divergence right there on the daily chart where you made a new low. See that low price action right there? And it was a higher momentum. So bullish divergence. And the downtrend line that I marked out is right here. I'm not in love with it because there's not a lot of reactions around it, but it's kind of the benefit of the doubt trend line. So I'm looking for some, there's the potential basically for an impulsive break higher. And that would be a buy signal in TLT. Until you see that, I just don't see it can continue to diverge and continue to make new lows and continue the bullish divergence. So again, waiting for a trigger to go long TLT. Yeah, gold's hanging in there. It's gonna probably just be around this 1800 level for a little bit. Get some consolidation here. So I think likely this is probably the low in gold, but gold could go slightly lower. 1790 is really the major support, and if I roll back, that's really the level where you can see right back here in 2013. It is kind of the major support, and you can see we popped above it here and just kind of built a little base and then exploded higher. So to come back down, I could even see us undercut it slightly and then recover. Again, when everyone's watching a level, it's usually not going to get to that level, or it's going to undercut it, or kind of slice through it a little bit. So watch for one of those scenarios to play out. However, gold did exactly what I thought it was going to do way up here. When we started to put in the downtrend, basically, it was pretty obvious, or relatively obvious, that gold was going to come to a back test of this 1790. And a lot of people said, no, it's not going to get there. No way. Well, yeah, we're here. So you just have to, the key is to look at the charts. And if you're not familiar with how to read charts or how to use technical analysis to your advantage, take my trading course, my technical analysis and trading course. There's a link in the description below. It's $99, so it's a very fair value. And I think you'll gain a lot out of that course. The dollar, DXY at least, which is a dollar proxy, is drifting lower, making a new low, it looks like. Yep, a new low today. However, it still has bullish divergence. So you can see here the dollar is, it's got the bullish divergence. Now, if it continues lower and makes a new low, then it can burn through that. But as of right now, we do have the bullish divergence. It's not confirmed because the PPO, you don't have a crossover. I'd like to see this blue line cross bullish over the orange line, but it is currently, there still is bullish divergence. So this is a divergent low today in the dollar, and now what I would wait for on the dollar is something like this. We could probably break it down and look for some sort of breakout, bullish break above this level, something like that. And you also have major resistance right here at 92.70. So some sort of a bullish break above these, and that would be a buy signal on the dollar. Barrett gold still hanging in there. You can see we have this bullish falling wedge, and we're just kind of hanging out in the wedge. So nothing's out of the ordinary here. Technically, it's still a bullish setup, and I bought this yesterday at the open right down here. Still profitable, not by much, but it's this continues to kind of hold the bullish pattern. So I think we're going to get a bullish break higher. Here's XLV, healthcare sector, which is the second largest sector in the S&P 500. So it's important to watch. To me, this looks like a or a bear flag. You've got a flagpole here. You've got the flag. See, it's just kind of consolidating in this flag. And so I look for a breakdown out of this flag. And likely that will set us up for a gap fill of this 103.50, 103.54. So I would think we'll have a reaction right here at 105.78, and then come down and fill this gap here at 103.60, and then maybe we'll get a more meaningful reaction. But that looks good to me. It's just flagging out right now. We're waiting for the breakdown. Someone asked me if I'm still in this Joe trade. Still looks good to me. I'm still long. You've got bullish divergence that was intact right here. There's your bullish falling wedge. We broke to the upside. And now you're just getting the pullback. You're getting a pullback consolidation, I think. At support, though, you can see it's above this 33.92 level that I have. And it's just kind of hanging out in here. So I think it's just building, and then it's going to make another move higher. So still long. Doesn't look, nothing looks bad right now for this swing trade. My target on this is probably all the way up here at this 40.71, or potentially We can look back, possibly even higher, 45 or so. So kind of just letting this thing do its thing. Okay, PayPal here. I stopped out of this early this morning when we opened basically, and we were opening right here above this area. I stopped out, so very, very small loss on this one. Again, I just got short the other day when we were trading against this island cluster reversal pattern right here. But again, like I told everyone in that video, that if it breaks above the top end, it should just be a marginal break higher, and if it's not and it ends up going higher, I would definitely stop out, because it invalidates this island pattern. So still, this one obviously up 3% today. Now, if you do look, though, it is interesting, and this might play out on the daily chart. There's negative divergence right there on the daily, and this price action just today is making a slightly marginal new high on this daily chart above these previous two highs right here. So that is a divergent high, and the level to watch for, I think, is an impulsive break back below this level right there, which is about 213.04. Now, we might just close where we're at right here today, but again, an impulsive breakdown, that would be a sell signal actually on this daily chart, setting up a potential larger move to the downside. I do think this gap down here, see this gap? I think we're going to fill that gap if we get that impulsive breakdown. But again, the divergence is not a reason to short. I was shorting against this island cluster right here. It invalidated that, so I need to get out of that position, and I did. But now you could short potentially if there's an impulsive sell signal, and that would be using this negative divergence to signal that the probability is elevated that you will get that sell signal. So watch for that. DraftKings here, just working its way up this bearish rising wedge, and there's negative divergence is intact here on the hourly, or sorry, on the daily. We did get the reaction though. You had negative divergence right here, and then you got the big sell-off. We don't have negative divergence on the daily chart yet. We do have it on the hourly though. If I go to the hourly, you'll see here, this is a divergent high. If I get rid of all these lines here, you'll see that we have it right there on the hourly, where it's making a new slightly new high on less momentum. So negative divergence is there on the hourly, telling me that I think we're probably going to get a pullback. So I'm just kind of watching that one. Here's Carvana on the hourly chart. You can see we had this uptrend right here, broke the uptrend. Now we're just flagging out. So we'll see. I think there's going to be an impulsive breakdown, but obviously they could bounce it up and recover support. So watch for that. If you go to the daily, big negative divergence, and that's what tells me this is going to break to the downside, because on the daily we have this price action right here was a slightly new high, and it was a negative. It put in negative divergence basically, or continued the negative divergence. So negative divergence is cleanly intact on this daily chart. I really do like this one to the downside. And, I think there's probably another level we can mark out right about here. I think you'll get some substantial move to the downside, potentially down to maybe about 109, 110. And so I am short this one, and I'm waiting for this one to break down. GPS here, there's no trade yet, but see, from my perspective, I'm looking at the hourly. I see this big uptrend line right here that GPS has been walking up, and it got really far away from it, and then they came out, I think, with bad earnings or something, and it's down 18% today. But look at where it gapped down to. Basically sold right down to the support line, and it's holding that support. So unless I saw some impulsive breakdown from the support line, it's at support, and there's nothing to do there. You could go long, actually. Okay, NEO. I took profit this morning on this big gap down because I saw they were ramped it up and started to recover this support line. See this hourly support line right here? We gapped below it, and they bought the dip and brought it back above support. So that was a quick 3-4% profit for me one day. But I don't want to be short after this recovery. So what I'm looking for is a breakdown or an impulsive, some sort of a sell signal or breakdown of the support line that actually sticks. I figured it wouldn't happen today with being such a low volume holiday week. The buyers, the dip buyers, the retail crowd's going to buy this thing, and so that's what I figured would happen. So looking for an impulsive breakdown. Okay, run. Starting to get interesting for reestablishing a short. I'd like to see it go a little bit higher, but you can see here's your trend line on the hourly going back to March. You just walk up this trend line, and then you broke here. So we got short right, I got short right here on this break, this right there. It broke down, it came down, I covered it right there, and then it broke, and I started, and then I reshorted it right here at the kickback. And I covered though when I saw it started to ramp and looking like it was going to do another back test, and that's exactly what it's done so far. A little bit higher though. I'd really like to see if it can get all the way up another 7-8% up here to about 73 bucks, right around there, and that's the area I'll be looking to reshort this thing. Why do I want to short this thing? Well, if you look at the daily, big negative divergence right there. This was a divergent high. Yes, we did get a reaction, but that divergence is just continuing to extend. So what I would look for now is, this being a kickback rally or a back test of broken support, and then we reject and head down. For this one, I think if we do back test and it starts to reject, I think all the way down here at this 23.46 is a probable target, and that would be, that's a long ways down, but that's a drop of about 60%. So it's a bear market drop, looking for that. But again, I'd like to see it go a little bit higher before I start to reshort this thing. Okay, and that's all I have for today. So everyone, thank you, and leave me a comment, leave me a like. I appreciate all that, and I'll catch you guys on the next one.